Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. During an election year, November is the best month of the year for the S&P 500. December is the third best month, and will 2020 follow suit and end up strong? Joining me to discuss is Ryan Detrick, Chief Market Strategist at LPL Financial. Ryan, it's great to have you with us as always. Welcome back to Trade Talks. And I would imagine the remainder of 2020 is predicated on a clear-cut election result and what happens with COVID-19. But this first chart is really interesting.
Well, Jill, first off, thank you for having me back. But you're right. I mean, every election year, what happens, right? You get a little weakness in October. October historically is the weakest month of the year during an election year. And then when the election's over, no matter who wins, once that uncertainty is relieved, it is what it is. November is the best month of the year in election year, and December's pretty strong also. So Santa Claus normally comes to town, but we're all full 2020. Unlike anything we've ever seen before. But still, we think, if we can get a winner fairly soon, we probably follow that same template once again this year.
Yeah, and then finally, once we get the clear-cut winner, of course, we can start trading around what sectors and stocks might think about the winner's policies, which we have not had the opportunity to really do as much because it hasn't been as clear-cut. We just haven't had the opportunity to debate those issues.
No, you're right. I mean, just look at today. Just look at what's happening today. Huge rally across the board. Those cyclical value names, what some people say are more of a potential pro-President Biden play. But then big cap tech is really doing well, which is more of a pro-President Trump play. So there's a lot of confusion, obviously. We see the same polls as everyone else. Obviously, it's Joe Biden's race to lose. But still, I don't think anyone wants to go out on a limb and make a clear call here because, again, we all remember what happened 4 years ago. The way we look at it at LPL Research is this. Whoever wins this election is going to have the keys to a really strong economy and likely one that's not in a recession next year with expanding earnings. And that's normally an elixir for continued higher prices. And that's kind of how we see things playing out here the next 12 to 18 months.
And Ryan, you also made an interesting observation on how voters seek balance. This is something that's not atypical. It's usually two and done, right? So tell us more about that.
Oh, exactly. If you look back in market history, the presidents tend to win the re-election. All right, that's normally how it happens. But if you go back even further, 8 years is about as long as a party gets. We had 12 years with Republicans, about 20 years or so ago. But for the most part, the beautiful thing about our economy and the way democracy works, you get about 8 years or so, and then things swing a little too far one way or the other, and then the other party tends to come in power. And you think about right now, obviously President Trump's been in the office for 4 years, but did we swing too far, one direction? And that could be maybe kind of what's on investors' minds right here. But historically speaking, it's really unique the way we tend to kind of make up for going too far one way or another. And if you don't like this election's results, maybe if you're patient enough in 4 to 8 years, you're probably going to be happy. That's what market history has told us time and time again.
Right, but the one constant has always been, if you're a long-term investor, you're not looking to try and trade these moves like a day or swing trader, this could be some of the most opportune times either to pick up new shares for your 401k to, get shares at a cheaper price as we go through the normal machinations of a market.
You're right, Jill. That's one thing we have harped to our 17,000 LPL advisors is just that. We all have an opinion when we go vote today or if you've already voted. But at the end of the day, people might not like President Obama, his policies. For 8 years, you missed a huge bull market. If you didn't like President Trump and his policies, you've missed nearly 150 new all-time highs on the S&P 500 the past 4 years. So the reality is if the economy is strong, which we think it really is, look at the manufacturing data. We didn't see just in the U.S., but globally that manufacturing data. The reality is, yes, we're going to have rolling shutdowns. The virus is still there and it's still devastating, but we're opening up. And again, those cyclical value names are making a bet that the economy is going to open up next year. And that should lead to, again, a continuation of what we're calling a new bull market here into 2021.
All right, Ryan, great to speak with you as always. Thanks so much for joining us on Trade Talks.
Thank you, Jill, for having me.
You got it. And thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.